Hi guys, I decided I was going to do part two for the VTI video I did a little bit earlier. I figured that if I actually kind of write some of the stuff down that I was talking about, it might be a little bit easier to kind of visualize. Sorry, completely forgot about that. Typically I try to, only time I have time to do these videos are after doing a 12-hour shift at work. And after that, my brain's pretty much gone. So I forgot all about that I could kind of write some of this stuff down. So we'll do some additional information, or same information, but I'll just write it out real quick. So for VTI, it's an ETF, total stock market ETF. So the ticker symbol would be VTI. And then we had the expense ratio was 0.03 of 1%. So that's basically the cheapest expense ratio for ATS there is, I would say. Again, there I believe is one ETF under Fidelity that might be free, or zero expense ratio. I believe it's something like FFC Rocks or something like that. I've never purchased it before, but I think there might be some type of caveat, obviously, for the expense ratio to be zero. But you can go to the Fidelity website and check it out. Next we have dividend. So dividend for VTI is, I believe it's 1.25%, which is decent. It's not super high. I actually do have a little bit of dividend ETF. I believe the highest one, or for example, Schwab D, I have quite a few shares of that. The dividend is about a little bit under 4%. It's like 3.6, 3.7%. So it all kind of depends what you're looking for, but the VTI is basically a large cap blend, meaning it's not really a dividend ETF, but it's not really a growth ETF, so it's somewhere kind of in the middle. So 1.25% for the dividend. Next would be the 10-year return for VTI is, I believe it's approximately 13% per year over a 10-year average. It's not exactly 13. I think it's 12.8%, something like that. But that's still a pretty good return. On average, stocks return about 10% a year, so it's a little bit above average, I would say. Next, let's look at the index. So the index obviously is the total market, so the total stock market, basically. Total market. And it is US or domestic stocks. I believe it's like 99% US stocks, and the remainder might be international. So I would just say it's it's basically US stocks. The next thing we can look at is number of holdings, or how many stocks are in this ETF. So the ETF you can consider basically like a basket of stocks. So there's approximately 4,000 holdings in VTI. I don't remember the exact number. I believe it's about 3,600, something close to that. So usually I round it up and I just can look at it as 4,000 stocks. So very diversified. So you can compare it to the S&P 500, which is basically the 500 largest companies in the US. So even 500 is pretty well diversified. VTI, 4,000, you're basically buying the whole stock market, so it's diversified and it's pretty safe. So what is enough as far as stocks to be safe or diversified? Depends who you ask. Definitely even 500 for the S&P 500, in my opinion, is very diversified. If you ask somebody that does only stocks and trade stocks or single stocks, even if you ask them, you'll probably get a different answer from everyone. But most people, I would say, if you're a stock trader, would say between 20 to 30 stocks is considered diversified. So definitely 4,000 or even 500 with S&P 500 is, I feel pretty comfortable being considering it a very diversified ETF. And the last one we can look at is capitalization, or how big of companies that VTI invests in. So most of the companies in VTI are going to be either large or well, technically I think it's mostly mega cap or large cap, but when we're going to talk about small cap versus large cap, they're going to say large. They're probably not going to say mega cap. So basically, mega is any company that's over 200 billion, and large cap is companies over 10 billion, I believe. So, quick recap. I love VTI. Again, this is not financial advice, so do your own research before you put any money in it and decide what you want to buy. But the majority of my portfolio is in VTI because I feel like it's probably the safest. Well, let's say it's very safe, but it's a very good compromise between safety and return. So your return is 13%. So it's not the safest ETF. Safest ETF would probably be something like a bond fund, a bond ETF, or even, we'll go into later in a different video, but like a defensive ETF. So something like healthcare, utilities, or missing one, healthcare, utilities, or consumer staples. But obviously there's a trade-off, because the more safety you have, the safer it is. The return's not going to be as good. It's probably going to be, less than this, maybe 8%, 8-9%. But again, I'm jumping topics here. Yeah, so 0.03 expense ratio, very cheap expense ratio. Dividend return is 1.25% dividend. Annual return from this ETF is going to be approximately 13%. The VTI represents the total stock market. That's why it has almost 4,000 stocks as holdings, and it is considered a large cap ETF. All right, sorry about breaking this up into 2 videos. Forgot all about it, but usually like, 12 or 13-hour day by the time I get off work. So, but I'll try to put out another video maybe next week on a different ETF. All right, later, guys.